Better move on, assess the technicals and tell you how you can look at the markets in a far better manner. We've got Nooresh Merani joining in, Kunal Bothra in just a bit. Nooresh, let's get in a sense from you then first up as to how you're looking at the trade setup, given the fact that yes, indeed, the life highs continues, 25,950 and a lot of support coming in from, of course, all quarters, but banks in particular.
So finally, after a really long time, banks have taken the lead. We've seen Bank Nifty hit a new high, and that augurs well for the whole sector as such. It's been a long time we've seen outperformance come from the banking space, and that creates more opportunities in the banking space, apart from the large names also. So if you could pick up any of the smaller names also, the trend has been very similar. Most stock prices are down, say, 15-20% from the last 3-6 month highs. Majority of them have not given great returns for the last 3-4 years. So looking at the whole banking space, there are interesting opportunities across the board. At the same time, yesterday was a day where the breadth improved. So unlike the day before, wherein the Nifty made a tick, we did not see a good breadth. Yesterday, at least, some of the mid-cap indices again also hit a new all-time high. We are yet to see a fresh all-time high on the small-cap indices, so that should also catch up. So overall, the best way to ride such a market is to keep shifting your trailing stop losses higher. So for now, it's a little deeper at 25,400 odd levels, but it will keep getting shifted higher as we go ahead. But the structure is positive, and going forward, banks could be a good play in the small and a mid-cap side also.
Okay, let's welcome on board Kunal as well. Kunal, I'm sure you've seen the latest study about F&O trading as to how 93% of the traders incurred losses. I'm sure you're part of that 1% who does make profits. But what are your thoughts? I mean, is it really that bad? And if people continue to incur losses, as has been the case for the last 3 years, so is it just an addiction then?
No, I think it's the intent at which traders enter, because if you're with an intent that you are looking to double your capital every year, then you're bound to make losses, because there's going to be those three odd. So in the last 3 months there have been 10%, 5% correction for the indices, and for traders who are extremely leveraged, I think it's bound. When you don't have discipline, when you don't have your risks in place, then it's bound to be that you're going to lose on those 3 critical days, and you can probably erode 50% of your capital also. So I think all these algos and the systems which are at play, they generally are very disciplined. There's risk parameters, there are risk filters which are attached to these algos, and that's why they could probably withstand all those negative days.
Okay, so on that note, tell us 26K today and what's going to lead it?
Yeah, I think of course it has to be banks, financial services name. You've seen very good comeback in the autos, the metal, commodity pack. What I also like about the market texture is that going into the expiry week, we are also looking at short covering data from many of the other sectors. For example, autos has seen a good short covering, individual names like M&M, Scotch, etc. We've also seen the real estate stock picking up, and that's an evidence of short covering going into the expiry week. And I think that should augur as well as bode very well for the overall market sentiment, because we are in that phase of sector rotation, and we've been into that constant phase where even if there are few odd sectors which take a back seat, I would probably believe that there could be a chance that many of the other sectors play a very strong leading role and try to cover up and balance the indices. So I think that's the nature of the market uptrend which we've gone through over the last 6-8 months or so. Continue to believe that we could probably charge up higher on the back of this sector rotation pattern. So that's why we believe that 26,000 is not just a landmark which we may cross, but I think it's a landmark which we may sustain also.
All right.
If you like this video, then like, share and subscribe to ET Now.